Yesterday, we took a look at the oil market. We put headlines aside and we just paid attention to price action. And today I want to do the same thing with gold. Now, typically we have seen gold perform well when there is global conflict, but let's look at what the chart has to say. Now, over the last couple of years in this bull market, you can see that blue line. That's the 50-day moving average. And every time we've come down to that zone, that is where we have made a bounce, including the sharp sell-off that we saw in the end of January, beginning of February of this year. That 50-day moving average was tested and we saw that strong bounce off of it. Right now, that's around that 48.50 level or so on gold. That's going to be the major area that we want to see hold, because if that does, we continue to have that series of higher lows in place. Now, the concern, of course, here is that the pop that we saw at the beginning of this week was faded overnight. We saw some sharp sell-off in gold, but we've got about half of the move back here before we open for the U.S. session. But that could be a lower high, and so I put that down arrow above the price action here over the last couple of days, because that would be a lower high than what we saw before the sell-off in January. And an uptrend is a series of higher lows and higher highs. If we have higher lows but lower highs, then we start forming that wedge, and then we need to pay very close attention to where the next move ultimately is. Bottom line, price structure in the gold market is still incredibly bullish. We're above a rising 50-day moving average. We have held that consistently here over the last couple of years. And as long as that stays in play, then that would be a positive sign. But we are going to certainly keep our eyes posted in the gold market and the oil market moving forward with everything that's happening globally. But instead of paying attention to the headlines, we're going to pay attention to price action.